Hello and welcome to Nordnet. Today we are joined by John Box, the CEO of Meltwater, and CFO in Meltwater, Lena Shishkina. Meltwater is a global Saas company providing social and media intelligence. My name is Roger Berntsen. Before we move on, it's important for you to know that this session shall not be considered as investment advice. Our only goal is to learn more about Meltwater as a company and, of course, its underlying industry. So, John and Lena, you will now give us a short presentation before we round it all up with a Q&A session. So I leave it to you guys.
Perfect. Thank you very much, Roger, and appreciate everyone joining today. Let me just share the presentation and we can do some quick introductions on our side and then jump into it. So I can begin. As Roger said, my name is John Box, CEO for Meltwater. I've been with the company now for just over 16 years, originally from the UK. That's where I started with Meltwater back in 2006, but today I'm based out of New York City. For the 7 years prior to becoming Meltwater's CEO, which I've been now for the last 2 years, I was Executive Director for Asia Pacific, so overseeing all of our operations in Japan, China, Southeast Asia, Australia, and New Zealand. Lena, do you want to do a quick intro?
Thank you, John. Thank you, Roger. Lena Shishkina, CFO of Meltwater. I joined the company last year in October, came from the SaaS and software industry, spent about 20 years in the industry and the finance professional together, worked for SAP in multiple roles, including the CFO jobs, as well as Workday being CFO of the international business. Recently, I was based in Spain and worked for the company Redpoint as the Chief Financial Operations Officer, and now I'm based in London, here working for Meltwater. Thank you.
Thank you, Lena. Okay, so for the next 15 minutes or so, we will present on the company Meltwater, providing an overview of the organization, our current trading and financials, double click on our strategic focus areas, and then lastly, look at the targets, and that's both for this year, but also for the long term. And then, of course, at the end, look forward to having some time for Q&A. But let's start with the company itself, the history, what we do, our products, and then who our actual customers are today. So as Roger mentioned as part of his introduction, today Meltwater is the global leader in media intelligence. So we help our customers to find and analyze online data. The company was founded in Oslo in 2001. Today is headquartered out of San Francisco, but our footprint is very much global. We have just over 27,000 customers. They're in over 130 different countries, approximately 2,300 employees. They're in 50 different locations globally. ARR at the end of the second quarter was $464 million US, and close to 100% of our contracts and revenue is subscription-based or recurring revenue. So if we take a look at what we actually do for customers and the products that we take to market today, and also how we differentiate. The number one way that we differentiate in our space and industry is by having a fully integrated platform. And that's for multiple different use cases across PR, communications, and marketing. The primary use case for our customers is brand management. So we help them to track and analyze their brand, to look at share of voice, reputation and sentiment, and how those are trending. And that's across both traditional news as well as social media. A large number of our customers build upon brand management by using our products for competitive intelligence, so benchmarking their efforts with others in the industry, as well as risk and crisis management, so looking to spot potential issues or threats that may occur in real time, and then also social media management, so helping our customers to publish content across TikTok, Instagram, Twitter, etc., and then engage back and forth with fans, followers, and consumers. Last year, the company completed 4 acquisitions. 3 of those, Linkfluence, Clear, and Owler, have added new use cases and market opportunity. Previously, when Meltwater has completed M&A, we have integrated those companies from a technology and a product perspective into Meltwater. And that's happening now with the latest acquisitions from last year. As part of that process, of course, it creates synergies. That's both from a cost perspective, but also when it comes to going to market with revenue. So it allows us to continue to provide this one integrated platform to our customers' benefit, and ultimately a single source of truth for their PR and marketing efforts. So this slide is not just about what we do for customers, but it also speaks to why we win against the competition. So customers choose Meltwater because we provide the largest set of capabilities and use cases in the industry. And also for global contracts and global organizations, we're able to replace multiple local vendors as part of a sales process and lean on the global footprint of the company, as well as this broad set of capabilities with the best access to content across both news as well as social. So in terms of the customers that we work with today, as said before, there's just over 27,000 customers using Meltwater right now. And it spans across all different verticals and industries, many category leaders across these. And today we work with over 50% of the current Fortune 500. When I look at this slide, there are two key takeaways. The first, if any company or organization, pretty much in any industry, needs to find and analyze online information, they can be a customer for Meltwater. But secondly, I think this slide highlights a lot of opportunity for our business moving forward. Many of the logos and customers that you see here are only customers for Meltwater in one or a small number of markets and countries. So we can take local installations with companies like a L'Oreal or a Siemens, for example, and turn those into global contracts, which in turn creates a lot of top line opportunity for Meltwater in the coming years. Okay, so now we're going to take a quick look at the recent trading and where the business stands today, halfway through 2022. ARR growth was 13% in the second quarter, and we had organic revenue growth of 12% in Q2. One important point to highlight here is the impact from FX. Today, more than half of our revenue is coming from non-US dollar currencies. So it's important to understand the numbers in constant currency to see how the business is truly performing from a year-over-year standpoint. So revenue in Q2 adjusted for constant currency would have been 116 million, so 6 million higher than the reported number in actual FX, or an 18% year-over-year increase. For the first half of the year, revenue was 219 million. Again, in constant currency, it is 9 million higher at 228 million, also an increase of 18% year-over-year. Soon we'll speak more about our premium segment. It's one of our strategic focus areas that really fueled the majority of our overall ARR growth in the second quarter, and premium showed 24% ARR growth in Q2. ARR from social products continued to show strong growth rates, up 30% in the second quarter. Customer retention, we've maintained the same rates as the first quarter for the total portfolio, 108% net retention in premium, 118% in 100K plus accounts, and 95% across all customers. And all of these rates have showed a year-over-year improvement. Adjusted EBITDA margin of 5% for Q2 and 6% for the first half of the year. Again, both of these numbers are impacted by FX. And whilst most of the revenue, or more than 50% of Meltwater's revenue, comes from non-USD currencies, the cost is actually more evenly distributed, with some larger items such as AWS for hosting, of course, billed in US dollars. So in constant currency, adjusted EBITDA margins would have been 1 point higher in the first half of 2022. So this slide once again highlights that impact from FX on the revenue and the growth rates in the first half of the year. The company at the end of June this year, 464 million in ARR, growing 13% year over year for the last 3 quarters. From a revenue perspective, that's when we see the impact from the FX coming in. So again, in constant currency, revenue would have been 3 million higher in the first quarter and 6 million higher in the second quarter. The constant currency rates show 18% versus 12% growth in actual FX. Moving forward, Meltwater will continue to report and guide in actual FX, but also provide the numbers in constant currency, just to provide that clearer picture of the year-over-year trends. So we'll spend some time here on the premium segment. And just to clarify, this is ARR, which is coming from any of our customers that spend $25,000 or more per year with Meltwater. So the premium segment today, it's 238 million in ARR, or 51% of the overall total. And that's compared to 47% at the same time period last year. And the reason why we focus on premium customers is quite clear. These customers, they are more profitable and they have the strongest retention rates. So the more of our business, which is coming from the larger customers, the stronger the retention rates will be in the overall portfolio. And it also provides us with opportunities for margin expansion. So the larger portion of the business, which is coming from premium, the stronger the margins will be for Meltwater. So we're pleased with the development that we see in premium, but want to continue and improve upon these numbers in the coming quarters. Second focus area, and these two are very much interlinked, is the ARR, which is coming from the sale of social products. And in the second quarter, we saw 30% growth in ARR from social, which is now 198 million of the total ARR of the business. So the ARR from social products, it makes up 43% of the total, and that's a 6-point increase compared to the same time period last year. The overall market demand for social products, it remains very strong and is growing. And we see this particularly in Asia Pacific and the Americas right now. The strength of Meltwater's social products and offering, it's a key reason as to why we win the larger enterprise level contracts, which is why we say these two strategic focus areas, they're very much linked. In the future, there's no question that social ARR will make up the majority of our overall business. Lena, do you want to highlight a couple of the key financials here before we wrap up?
Thank you, John. So we reported last week our Q2 financial results. We finished the quarter, as John said, with the revenue 109.7 million at the higher end of our revenue guidance range, despite of FX headwinds driven by the weakening non-US dollar currencies. In the first half of 2022, organic revenue accelerated to 14% growth year over year and 18% growth on a constant currency basis. This is compared to 8% organic growth in the first half of 2021. Revenue growth in the second quarter was 12% and 18% in constant currency. Our focus right now is on our long-term goals of 20% revenue growth and 20% plus adjusted EBITDA margin by driving operational efficiency and growing profitably with positive cash. Gross margin was 74% in the second quarter and first half year. That compares to 75% in constant currency. We still fully expect an improved gross margin in the fourth quarter, driven by synergies from M&A and high revenue against a largely fixed cost base. This improved run rate will continue into 2023. Sales and marketing expenses in both in the quarter and in the first half year were at the planned levels, and for the full year, sales and marketing is expected to be at 44% of revenue. R&D at 11% of revenue, as we planned. We continue to focus on product development and product integrations with acquired companies, particularly in the social segment. Adjusted EBITDA margin in Q2, as John mentioned, was 5% of revenue, and in the first half year, adjusted EBITDA was 6% of revenue, or 13.9 million. We're committed to expanding margins in the second half of this year and into 2023, while ensuring sufficient investments are made to support our growth objectives. We are operating cash positive business. In the first half year, the business generated 11.9 million positive cash from operations, and this compares to 6.4 million in the same period last year. Strong positive cash flow from operations provide us with flexibility to invest in our future growth. Cash balance as of 30th of June 2022 was 34 million. In addition to the total cash available at the period end, a 100 million debt facility was available on the 30th of June 2022 from the 150 million credit revolver secured in 2020. With this, I will hand over back to John.
Great, thanks very much, Lena. A few slides on our go-to-market update and double-clicking further on that premium segment that we mentioned before. Then we'll look at the guidance and long-term targets before we move to Q&A. So we'll start here. These are some examples of the latest premium customers. So these are looking at new premium clients that came on board with Meltwater in the second quarter of 2022. On the left-hand side, it features 8 logos, which are now part of our 100K plus cohort, so greater than $100,000 in ARR. And on the right is other premium customers between 25K and 100K. As you can see, like our overall customer base, it covers many different industries: tech, public sector, financial services, luxury goods and fashion, and names such as Burberry, Pirelli, and DoorDash. And I think once again, the slide really highlights the broad appeal of the Meltwater product and also our success in continuing to move up market. In the second quarter, the company added $11 million in ARR. Of that, 10 million was in premium. So despite a tougher external environment and the macroeconomic pressures that we see, we continue to win these larger contracts in particular. And we feel this is a great proof point of the move up market strategy, but also speaks to the importance of our product during these uncertain times. It is still a product and a spend which our customers are prioritizing. So the logos on the prior slide were some examples of the 158 new premium customers that were added in the second quarter. So that was up from 152 in Q1. The average price point in premium is 58K per year. And of the 158, 21 were in the 100K plus cohort, and the average price point there is 209K per year. And this really, once again, reflects our continued efforts on the enterprise segment and those customers. And we can quite clearly see that we're winning more of these large paying accounts today. And the efforts that we're making here, it's having a really positive impact on the average spend per customer that you see on the right-hand side. And for the first time in Q2, this crossed $17,000 in ARR. So that's the average price point for a Meltwater customer today is 17.1K per year. We spoke previously and briefly to retention rates. We'll double click on that topic here. So overall premium net retention was 108%, and that was up 6 points from Q2 of last year. Across all customers, it was 95%, up 6 points from the same time period in 2021. So overall retention has stayed at the same levels for the company, despite a small dip quarter over quarter with 100K plus accounts. And as this is a relatively small cohort of customers with larger deal sizes, the number is slightly more prone to peaks and troughs and dips and valleys in the numbers quarter over quarter. But the fact that the overall premium and overall customer retention rates stayed the same, despite the dip in 100K plus, it highlights improvements in both non-premium retention rates, as well as premium accounts below 100K when compared to Q1 of this year. And although retention rates overall can move up and down quarter over quarter, it remains a key focus for the company, both this year and in the years to come. And we expect the overall trends to continue to point in the right direction. And as a larger part of our business comes from these upper market customers, that will have a flow-on effect for the overall retention rates in the business, which of course presents us with margin expansion opportunities. So last slide here is really about the future and what we expect to see for the full year 2022, but also for the long term. For the third quarter this year, we're providing revenue guidance of 109 to 110 million, and this is taking into account the impact from FX. We expect to exit this year with approximately 500 million in ARR and revenue for the full year between 440 and 445 million. So despite a 22 million impact on revenue expected from FX this year, we've only trimmed down the top end of guidance by 15 million, which we feel once again highlights that the business is performing well, and the adjustment is only to reflect the negative impact from FX. Adjusted EBITDA margin guidance is raised to 7% plus for the full year. So that's really it from our side, Roger. Happy to jump into Q&A now. We just close off by saying that we're pretty pleased with the performance of the business in the first half of the year. We believe that we've exceeded expectations and consensus, particularly on the margin side, and met them with revenue. Without the negative impact from foreign currency, we would have announced a very strong beat on both the top and the bottom line in the first half of the year, with extremely high confidence for original guidance for the full year. And this is all, of course, despite the tougher external environment that we see today. So the business has been around for a long time. We believe it's a very durable and resilient business model. We've always continued to grow despite of external factors and expect that to be the same case in 2022. So with that, why don't we move to the Q&A section?
Yes, I have prepared some questions. John, first thing first, so your Q2 report, what are the key takeaways from the second quarter? And can you also sum up the first half of 2022?
Yeah, happy to do so. And look, obviously, we just covered a fair amount of that in the last 15 to 20 minutes. There's also a 60-page first half report, which is available on our IR site as well as NewsWeb. But perhaps if we just summarized it in 4 bullet points, it would be that for the first half of this year, we are pleased with performance ahead of expectations and also the consensus, both for revenue and for margins in the first half of the year. Our premium business is performing very well. We see really good progress with the largest customers, and it's generating the majority of our growth. And that's a very positive point because it leads to stronger margins in the future, as well as increased customer retention rates. FX, I think we have to comment on. I'm sure a lot of companies are right now, but for Meltwater, as said, more than half of our revenue is in non-USD currencies. That's why we're providing insight in constant currency as well as actual FX to better understand or help people understand how the business is truly performing. And then perhaps the last key point at the end of the first half of the year is that we have raised margin guidance, and that's despite the impact from FX. It's because we're focused on very profitable and sustainable growth for the long term. And the investments that we're making today, they're very measured and prudent investments in light of the economic uncertainty that we see in the world. So they would be the 4 key points I think that people should take away from the first half of the year.
So we have to talk about the macro environment. It's quite some headwinds for everybody in every industry. But some companies, I've noticed that they signaled that the extreme inflationary pressure has eased somewhat lately. The US central bank as well has suggested as much as 2/3 of the inflation is maybe related to temporary effects. However, global growth is slowing and interest rates are expected to go higher in the short term. So can you give us, what's your take on the current macroeconomic environment?
No, it's a good question, and of course, it's a question that's on a lot of people's minds and lips right now. And it's difficult for anyone, I think, to know exactly what will happen next. I think it's fair to say that, the last 2 years have been quite turbulent for people. We've gone from a global pandemic into, of course, a conflict and a war in Eastern Europe. We're now seeing inflation, changes in interest rates, and almost a recessionary environment today. So there has been a lot of change for the world, but I think you mentioned the word temporary, Roger, and that's definitely how we see the impact, for example, from FX on our business, or what we're seeing with interest rates and inflation. Look, I mean, Roger, you used the word temporary, and I think that's how we're looking at a lot of these impacts as well, particularly those related to, for example, inflation right now, and what we're seeing with FX as well, which from a Meltwater perspective, it's really the largest impact that we've seen from this economic environment and from the changes in interest rates, etc. It's really the FX which is having the largest impact on our business. It's not a change in demand for products. We just showcased our customer retention rates. They've actually been consistent for the last 3 quarters, and they're up a lot compared to 2021. So if there was any impact on the business from the macroeconomic uncertainty, I think you would really see that in the customer churn rates, and that's obviously not there. I won't predict what's going to happen in the coming quarters, of course, but I think most experts tend to agree that currencies will change. The euro should strengthen against the dollar before the end of this year, and that would, of course, be positive for us if that's what happens. And the business has been through a lot of these types of environments before, and it's one of the times where having a large global customer base in many different industries on annual contracts gives us a lot of comfort for the future.
So I also like to focus some about corporate strategy. Meltwater is expected to stay in a growth phase for quite some time due to favorable industry characteristics. In other words, your investor, I guess there will be a concern with top line growth as well as increased cash flow visibility in the coming quarters. I suppose you have to be patient building your company selectively, especially on strength, and focus on financial performance going forward. Can you give us some deeper insights into your short/mid-term corporate strategy?
Yeah, and look, that focus on both top line growth as well as increased cash flow and profitability in the coming quarters, it's a focus that we share with our investors. I think you use the words patience there, and I think it really is about patience in balance. That's really how we're looking at things. And I think one thing that investors in the market should take away from the second quarter report and also the earnings call that happened at the end of August is that the company is performing well. You know, if you look at the growth rates in constant currency, 18% in the first half of the year, despite everything that we've just spoken about with the external environment. And there's quite clearly an increased focus on the margins, you know, because despite taking down the top line expectations, we have raised our adjusted EBITDA guidance for the full year. So the company fully understands that we need to drive both top line as well as bottom line. And with our business model, it's really about size and scale. That's what will allow us to drive both. And I think it also bodes well for cash flow and cash generation in the coming quarters. And we spoke a lot in the presentation just now about our focus on the premium segment. And I think that's an important point for people to take away from this session, because that very closely ties with acceleration in the top line, but also margin and profitability and cash flow opportunities. These larger contracts with global organizations, Fortune 500 companies, and so forth, you know, the results that we have in this segment, they're obviously trending well. We've actually just brought in some external leadership to help with our focus on enterprise. So we've appointed an SVP of enterprise sales called Scott Gibbs. He's based in New York with myself. He spent the last 7 years at Tableau and Salesforce, and before that, 18 years at Cisco. So a lot of experience to help us in this mission. And it's really our success in premium that will dictate the acceleration of the top line. And as said, that can have a really strong impact on our retention numbers and churn. And if we're successful in that mission, it will, of course, lead to margin expansion in the future quarters. And I think that if you look at the P&L that Lena ran through, gross margin, G&A, they improve with scale. In the fourth quarter of this year, you will see improvements in those two numbers. And we take those numbers through into 2023. So there's very natural margin expansion in those two areas with increased revenue. And sales and marketing, that's really a consequence of our ability to execute on enterprise and premium. And all of this, of course, adds up to improved cash generation. And remember, again, you know, this is a business that's been around for 22 years now. We have a lot of customers in many different industries. They're all on annual or multi-year contracts. And many of those customers pay a year in advance for the product. So the business model, the cash side of things, it's all very durable. And that's why we feel very confident about what's to come in the coming quarters.
Yeah, I see. So when it comes to outlook, I suppose you have already answered my question. So I will go straight to my last question, John and Lena.
Yeah.
What will be your top priorities going forward?
Yeah, good question. And I don't want to repeat myself too much, Roger, but the premium segment. And I do keep on coming back to that point because of the positive flow-on effects that success in premium has for the rest of the business. Improved customer retention and stronger margins for the business. The second key point I would highlight is a real focus on churn and customer retention. We have so many customers already today. We can drive a lot of top line, not by winning new customers, but just by expanding relationships with existing ones. So continuing to focus on our customers is key. Profitable, sustainable growth. You know, we made the point in Q2 earnings and we make it again today. That continues to be an increased focus area for us. We do have a business today of a certain size and scale that can produce really strong margins for investors. And that's why we want to focus on that type of growth for the future. And then the last point is probably around investor relations and financial communication. I mean, we believe that since the IPO at the end of 2020, we've made a lot of improvements in this area, but also with our key KPIs and with the business itself. But it's not quite been appreciated by the market yet. And we have to change that. So we strongly believe in the business, of course, and we want to use sessions like this one, as well as other marketing opportunities in the future, of course, just to help convey how well the business is doing and what the future looks like to the market.
Yeah, very good, John and Lena. I think we also, first of all, I would thank you for your time and your insights, and we will keep in touch, following your company for the coming years. So yeah, I think, and if our viewers, existing shareholders of Meltwater want to learn more about the company, I guess they can go into meltwater.com. Is that correct?
Yeah, that's correct. And there's a new investor relations site that was launched earlier this year as part of our increased focus in that area. So that obviously has a lot of good information. But then our standard homepage has a lot of good information around our products and our customers. So if people want to dig a little bit deeper into that side of things, it's all available on the website.
Yeah, very good. Okay. Goodbye, everyone.
Great. Thank you.
Thank you. Goodbye.